Hello guys, I hope you're having a nice weekend. My finance teacher, and we're looking at gold. We're looking at gold in the long term since the last couple of months in gold have been quite frustrating. Maybe it is time to have a look at what's happening in gold over the long term. This is a weekly chart going back several years. As you see, gold entered this bear market in the second half of 2011. There was a lot of volatility during that time, and the bear market was confirmed in the second half of 2012, when in half a year gold plunged quite a lot and dipped below its 200-week moving average. It stayed under the 200-week moving average for, well, 2-3 years. And what we saw in 2016 is gold price retested the 200-week moving average. It was rejected from that 200-week moving average with Trump election. Since then, gold made a second attempt in 2017 to break above 200-week moving average, and it did. It did break above 200-week moving average convincingly all the way through 2017 and first quarter of 2018. Gold has been trending upwards quite nicely. So we have sort of a first convincing breakout above the 200-week moving average in gold, and first breakouts above a resistance zone are often followed by a retest of that zone, which often becomes a support zone. And I think that's what gold is doing at the moment. Moving forward, what's going to happen to gold over the next several months? Well, let's have a look at RSI. This is a 10-week RSI. The reading for the 10-week RSI at the moment is 25.5. It's in the oversold territory, which generally means a bounce up is coming up sometime soon. Actually, it's relatively deep into the oversold territory. Since the bear market began in the second half of 2011, gold has been more oversold only 1, 2, 3 times. So over the last 7 years, this is only the 4th time gold is that deeply oversold on the 10-day RSI. So it is relatively unusual, and what might follow is a relatively unusual bounce up in gold price, because there is quite a lot of distance from this oversold level at 25.5 to the overbought levels. Since there's a lot of distance over here, there's a lot of potential energy that can potentially propel gold upwards and hopefully break through this level of 1370 that gold has been stuck under for a couple of years already. However, if this bounce up doesn't come up pretty soon, then what's going to happen to RSI is it's going to gradually move towards neutral levels, even if gold price doesn't move up. That's what happens to RSI. Generally, it trends back to neutral levels. So if gold beats around the bush close to this support zone of 200-week moving average, it's going to lose a lot of potential due to RSI moving back to neutral levels, and there won't be as much energy left to propel gold upwards, as the distance between neutral levels and overbought levels is of course much smaller. To summarize, if we want to see gold break above 1370, let's say over the next 2-3 months, then a strong bounce up should come relatively soon. Otherwise, if it doesn't happen, then I still do expect a rally in gold, but it might only bring us somewhere close to 1310 or so. That level has been a support and resistance zone for quite a while as well. So that is my view at the long-term chart, although at the end we ended up talking about the relatively short-term forecast. Let me know, guys, what do you think? I know this is just a simple look at support and resistance zones, so I'm interested in your opinion. Thanks for your attention and have a nice weekend.